welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome to the RationalInvestor.com's Daily Brief. Happy Monday morning. La 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 la. It is where are we here? 9 o'clock, 9:02. And actually, I like how Chris keeps us right on schedule. I love that about the team. Of course, Chris has got a birthday that actually agrees well with me, so it makes sense he and I are on the same page. Welcome to the Frivolity, 24th of July, basically last trading week of July here. And next Monday will be 31st. And then we'll head into the dog days of summer. Usually August is a pretty sort of quiet period. But we've got a bunch of business to do here this week that'll probably move markets once all the dust is settled. And if anything, once we're on the other side of Wednesday's big FOMC event, July meeting, we'll probably have a pretty good look at what the market's going to give us here for the rest of the summer. Did notice reading the rags first thing this morning. Generally speaking, markets on an upbeat tone. I've told you guys, if you want a pretty good sort of measure of what's going to happen in our market on a daily basis, especially if you're in Europe or in North America, really all I got to do is just pull up what Japan did overnight, and that'll give you a pretty good idea of what the tone of the day will be, unless there's some sort of major earth-shattering econ, like maybe a non-farm payrolls report, or even like a Fed meeting or something along those lines, or CPI or something that happens to come out through the North American session. Generally speaking, we're probably just going to carry on the inertia that the Japanese and the Asians had overnight. So it's a good sort of way to sort of frame your day. You know, if anything, I would call this, it's Asia's relatively happy. I think, and I've said this repeatedly to you guys, I think this whole nonsense of this Chinese sort of becoming a world power and all that crap, I think that's all going to now fade into the background, and we'll go back to, for a huge portion of my career, Japan was actually like literally the world's second largest economy. But a huge part of my career, East Germany and West Germany were actually completely different countries. So anyway, point of the matter here is, I think on balance, we're going to have a pretty relatively uppy day. And you can see North American indexes are enjoying a bit of a bid here. The one thing that you might find derails tech to a certain degree. So you can see tech is kind of underperforming, and probably also to a certain degree, the Russell 2000 is also underperforming. And actually, I like to have this kind of page up on the screen. And you can see Russell 2000 have a bit of a slog here. Small caps, they will be very cost sensitive. So when things like interest rates are rising, small caps can just get destroyed. Also, too, and you might argue NASDAQ, same sort of thing, a lot of technology stocks involved in this space. So if we have a day where energy, or a market where energy is dramatically outperforming, it's interesting how small energy is, relatively speaking, on the entire U.S. economy now. I remember the days when energy would be as big as some of these tech little windows here. See, energy is so small right now. It's down in here. But energy is enjoying a substantially bullish market state at present. So as a result, if you've never heard this before, it's probably good little rule of thumb that when energy outperforms, usually tech and tech stocks, and especially small cap stocks, they got a little bit tougher slog, because the rising energy price, of course, has to be worked into their budgets. and a lot of purchasing managers in sort of big Dow blue chip companies. Well, sort of if energy prices are rising and the cost of electricity is rising, the cost of heating is rising, the cost of fuel for cars is rising, that money has to come somewhere. And usually it comes out of operating budgets where maybe a company would have invested in the latest version of Microsoft software or whatever to improve productivity. But since energy prices are rising, money's got to come out of somewhere. So we put those tech purchases, which would translate into more efficient workers and higher profitability. We're going to put those purchases on hold. So anyway, that's the way the historic study goes. And if anything, I don't know whether I explained that well, but that would, I don't know, did I do that in 1 minute, that whole sentence or two? But it would actually be an interesting short for us to do. So maybe Chris, this week we're going to initiate a plan that on Wednesdays we're not going to do an after party report. Chris and I are going to go work on little shorts and stuff. But if you could write down in our little sheet that we do for the daily brief, Brian made comment about the comparison of energy prices and tech stocks and how they move back and forth. I think that would be an excellent short topic. Anyway, we'll cross that maybe on Wednesday when we look at it. So, with the very strong energy market today, and actually, I had a chart up here. Chris and I were looking at crude prices just before we got the video going. There's your move higher in energy. It's actually a pretty well-defined breakout here. Volume move. And I get the impression that this is actually going to be a measured move. So that means we probably, just to begin with, we probably want to go here to here and then just replicate that to the upside there to there, somewhere up in that area. So there's sort of initial objectives for crude up in that $80 area. So I think that's actually probably the most dominant feature of today. And unfortunately, that is quite inflationary. So it's interesting how this week we're all going to be concerned about FOMC. And you even saw sort of the headline sort of loading up the news rags is U.S. stocks, where are we here? Up a little bit. Fed monetary policy decision on Wednesday. Another 25 beeps has already been priced in, but the question is, will the Fed actually stop the tightening cycle? Also, too, you should keep in mind, and I don't think a lot of people in the marketplace really understand this, but the Fed actually raising interest rates is actually a good sign for the economy. They would not raise interest rates if the economy was really weak. They would actually do the exact opposite. So while they're actually raising interest rates, and this can go on for quite a long period of time, I think, we've done a bunch of sort of money cycle studies, and I think we're getting near the end of the interest rate hiking cycle. But while we're going through it, actually, it doesn't surprise me to see equity prices continually getting bid up, because it actually is a sign of a relatively strong economy. As well, too, we are basically in the I don't know, the jaws of second quarter earnings season. I don't think that sounds right. The meat and potatoes of the earnings season. So we're going to have a lot of, on top of the fact we got all this Fed stuff to deal with, but we're going to have a lot of pretty big companies coming out with earnings reports here through this coming week. So it's going to be up and down like a horse here. But I think that once we have actually made it to Friday and we start heading into the weekend, we should get an idea of what the sort of the remainder of this summer market looks like. And some people are actually kind of thinking that maybe we got a little too far too fast. Maybe we need to calm down here a little bit. I know we on the site we're passing around Larry Williams's free videos here recently, and I think somebody in the, a gentleman who does subscribe to his newsletter, and it was just sort of passing around his general thoughts. I think it was Sanjay. He was saying that Larry's looking for the market to actually sort of pivot and head back to the upside, sort of like, I don't know, end of the summer, beginning of September. So we'll see what happens there. Suppose we should probably make reference to it. I see. Yeah, here is the Larry Williams video that he was making reference to. So it's available, I guess, on YouTube. I don't know. Maybe do yourself a favor and listen to what Larry says. He's a pretty smart guy. I was just gonna say there a moment ago, it's probably a good idea just to make reference. I've noticed, of course, you all know, unfortunately, fortunately, I don't know how to frame it, but I don't have the greatest opinion, I guess, of totalitarian dictatorships. I do understand that there are people that do like these guys and who are friends of them. And I should probably, just for the record, I should probably refrain from showing my personal disdain for these types of people. Do know that there are a few people out there that were kind of offended by my overt dislike of certain totalitarian dictators. Anyway, all I'm going to say is in this time of very intense stress in the world, I will make a concerted effort to try and keep my opinions relatively to myself, unless they're to deal with actual trading or they have something to do with my own personal country and my personal hatred of substitute drama teachers. I think I was molested by a substitute drama teacher in my youth or something, because I definitely have a personal hatred for them. Just kidding. Anyway, so my apologies to people. There was one person in particular who was rather offended by my overt disdain towards a certain totalitarian dictator, and my apologies. Try and refrain from being so overtly politically biased going forward. That's my honest reach out to you, that I should probably just try and follow a neutral course. Anyway, it is what it is. Econs today, like I said, we're getting ready for this Fed. So I don't know whether we really want to place too much emphasis on what we're seeing out of price action here this morning. I get the impression it's more of sort of like path of least resistance right now. We've been talking quite a bit recently about how the US dollar, about a week or so ago, actually would have been one hell of a trade. I'm not quite sure why I didn't take the trade itself, but nonetheless, you can see, whoops, I don't want to get rid of the moving averages. You can see how, and I'd even put tweets out when we hit this bearish ABCD on the US dollar index. I was like, man, maybe temper your enthusiasm on the bearish side here, especially when you get things like 8s and 9s on the Tom DeMark. So indeed, we did have that dead cat bounce. We rallied into, we have this nice, not really market structure, but sort of low to low trend line, almost kind of like megaphone kind of trend lines, rallying up into that level, into first stop targets. Collins dump chaser zone, very cliche price action here. And lo and behold, look at what we have here. 8s and 9s starting to come up on this 6 hour Tom DeMark study. So, the malaise that you've seen in the stock market, especially on things like NASDAQ and stuff like that, is that a function of the market just sort of squaring up their positions, getting ready for the Fed, and maybe things got a little bit too far one direction, and we now will go through the process of probably carving out like multiple tops, maybe even a trap or two in here. And then once we get on the other side of the Fed, we'll see whether this thing actually does want to continue higher, or do we roll over. So I don't know whether it's a good idea to place any really big bets here ahead of that event. Probably best to just cool your jets. Did notice, I thought it was interesting, in the after party, we'll go into it a little bit more detail. But the signaling system seems to be rocking and rolling. I absolutely love key reversals. These are daily key reversals, and the simple methodology is you buy on a stop on the key reversal bar, you risk against the key reversal bar's low, and you want to take partial profits at maybe a 1.5 to 1 risk reward ratio. Put your stop to scratch on remaining, and just see where the hell the wind blows you. And I did find it interesting that, the system spat up a whole bunch of signals. And you can see that the bullish signals are all working away. They all fired here right out of the gate here. Let me look at this PNC Financial just going for it here. And interestingly enough, the bearish signals, not a single one of them has actually fired. That's one reason why I absolutely love the key reversal kind of concept, is the levels are just as plain as day. Nice and simple, nice and clean, really easy to follow. And you can see, I mean, the bullish reversals are all just killing it right now, but the bearish reversals, they haven't even gotten out of the gate, which I thought was fascinating. Also too, interesting, some of the names in here, right? So, PNC is a, financial stock. Chris and I were even kind of like, what the fuck is an Aon? What the hell do they do? Or Marsh and McClellan. I've seen that name forever. I'm not quite sure why. I don't know what they do. Interesting financial stock rocking and rolling there. But what really jumped out at me is these are two home builders. I thought the home building and the homes market was the shit, right? And that's just the awesomest. Nah. If these key reversal signals fire, oh boy, look out below. That's not the kind of thing you want to see to be overly bullish. And then I thought it was really interesting that General Motors, right, big GM, it potentially putting in key reversal signals. And these are daily signals. And then I pulled up the weekly signal and I couldn't believe this. You got Tesla actually put in an outside downside key reversal, and the signal even fired. This signal did fire first thing here this morning, and this is a weekly key reversal. That is a huge signal, folks. So this is going to be really, and I even tweeted it out today, this is going to be really interesting to see how this tweet and this signal ages, because that is actually a pretty big sell signal. So fascinating how that came in there. And I do find it interesting that how the General Motors is trying to put in an outside downside key reversal on the daily charts as well. So yeah, I thought that was fascinating. So that's the kind of stuff that, is it of value to subscribe to the dashboard, the breadth signaling systems? If I can convince you of the power of key reversals, would you like to get this kind of list in your email first thing this morning? Every morning, when these damn signals come in, and my job here, of course, is to show you, and I'll be more than happy to. I mean, God, when we add some signals, just give you an idea how these darn things work. I mean, it's just absolutely stunning. Let's do it over here. Would you have been a happy camper had you had gotten this outside upside key reversal signal in your email and you had gone and bought like 3 units of the QQQs? And the interesting thing is it also there were a whole bunch of tech stocks. There was a semiconductor stock that fired at the same time. There was Amazon also fired. I mean, you can see it there, and it's it's just really, really simple stuff, folks. I'm going to buy the key reversal level. I'm going to let's maybe even sell half of the position at a 1.5 to 1 risk reward. Actually, you know what I did on this one, which I think is even better, is you buy 3 and then you sell 2 at a 1.5 to risk reward, move your stop to scratch on the remaining, and just let that one runner, maybe it'll make you stinking rich. Who knows if this ever comes back? Maybe you could look back 5 years from now and you see that key reversal level was never tripped up and you're still long that one remaining unit. So it just goes to show how incredibly powerful these key reversal signals are. So anyway, there's your sales pitch. Subscribe to the dashboard today. As I had sort of said there a moment ago, not really. I mean, There's our stock market. I mean, it's awfully tough to get too uber bullish right here. And Mr. Williams is kind of thinking in his commentary. I mean, I do like the idea that this is a bull ABCD. We might shoot our way up in top here. But if we do, then that scares me for what's going to happen in like September, October. If anything, you almost kind of want this thing to settle down a little bit and just go sideways. And heaven forbid, right, we don't do one of these darn things and roll over and have to absolutely puke out. I don't think that's the scenario, but who knows? That's just Brian's opinion. Yeah, how we doing on time? All right. Let's see. It's Monday, so as I said, and we're heading into this Fed event, so I don't really want to if anything, it was almost kind of a fun little sort of demonstration day there for you. Breadth itself, kind of wishy-washy, sitting right on the 60 line for the ES. And what's interesting is like crypto bread still pointing up. The crypto market had a hell of a head of steam behind it. So I can understand why the it's taken so much time and effort for like the crypto breadth indicator to actually start rolling over. This is, I mean, the crypto market, well, the XLM and the XRP and all that kind of crazy stuff. I mean, interestingly enough, it's still actually pointed up. Having said that, we want to keep an eye on and keep in mind this is the breadth of the market. So it's measuring like the full space. So we kind of want to keep an eye on how are other names in the space looking. And, generally speaking, are we seeing more red or more green? Seeing quite a bit of red on the screen here today. So we might have this actually a little still soft heading into the Fed here. And then, the tweets and stuff that I put out yesterday were kind of like, the Bears got the ball. If I was manually trading all this stuff, we actually had a bunch of sort of bearish setups all working away here. So, the weekly message was when we did the video yesterday, we could really rally back up all this wicks here, a whole bunch of trap bulls in there that would love to get released, but we could also tank back down into trendline support and moving average support. And this shooting star signal had actually already fired. So we also, or at least I also pointed out that on the daily charts, that shooting star was a railroad tracks, and the railroad tracks had already fired. And then if we looked at the lower time frame chart, we had this bearish bot that was kind of, am I a real bearish bot or am I not? And while we were doing the video, they tried to perk price up through these highs here. And I left off sort of the broadcast yesterday saying, well, we got kind of almost like a toss of the coin. We could pop back up into reload zones, test the underside of trend lines on the underneath, or they could just roll this damn thing over because the railroad tracks and the shooting star and stuff were all working. And there's our bearish objective to the downside. So what ended up happening? There is that weekly chart. So you can see how we basically came into the 13 EMA. The shooting star indeed was correct. We could bottom anywhere down in here. This is where this is look left. And then once we've cleaned through these lows, really, Jesus, next key support line's all the way down there, folks. We do have a whole bunch of moving average support, and we also have a couple trend lines. So I don't think it's going to be just, but I wouldn't be surprised if into Tuesday, Wednesday, we're actually pretty weak. Now, the interesting thing about that is that you remember last month or last FOMC meeting, the market was weak into that as well. And then all of a sudden, once the Fed was done, the whole market just cranked back up. So that was all through here. So I wonder whether maybe Bitcoin's thinking the same thing again here. Where we got to get through this Fed announcement, this Fed event. We talked a little bit. I mean, look at the size of that hole in that profile. Holy crap. So it looks to me like they're now taking the process of filling that hole in on the profile. Momentum still pointing down. I don't see any reason for momentum here to be pointing up whatsoever. Looks like bears are trying to wake up. If you are a bear, you want to see a volume spike above these highs here. So we haven't quite got that yet. Um, and if anything, I even said yesterday that actually I was a bit surprised. I was expecting a nice test of these highs, but of course, market will do any old damn thing it wants. And it turns out that the bearish bot that we had painted here seems to be in full swing. And I get the impression that part of this is to do probably with interest rates and the Fed's uncertainty and all that kind of fun stuff. Cost of money going forward, which of course obviously dictates cost of production and those kind of things. Also, too, the energy market, very, very strong here this morning, which is another reason why I don't think that the Fed's going to be done raising interest rates. There's your crude oil market. We had mentioned there just briefly on the other charts how we had like cup and handle patterns. This thing looks like it wants to point higher. And from the futures perspective, hunting trading setups, my first comment coming out of the gate, of course, Monday, I don't really like to do a lot of futures activity, more watch because there's a lot of traps that are laid on Mondays. But I had simply posted in my routine, crude, no setup, they're popping the top. So there was the image first thing this morning. I could entertain maybe looking for pivot reversals up here around 79 and change. And of course, we have this is a bought buy level there. Move stop to scratches up here. So if we go and actually look at the price action, and before we got the video going, I was like, well, looks like they did basically what I was kind of anticipating them to do. Look how they rallied the market right into that 79 and change. There is the move stop to scratch level now on the bot. So if this thing does end up topping out, you can see we got a foggy boggy floating out up here fairly close. This was a 2.618 right in that area there. So indeed, the first thing this morning, shorting that was not a good idea. But as the day's progressing here, actually, I'm feeling a little bit more like, well, we could probably start hunting short setups. You can see we've got two confirmed, two potential off the lower time frame. And the trading plan that I'm going to use, if I do decide to do this top step combine, I don't know whether we got the 12 required, yes, go for it, comments on the YouTube page. I haven't actually looked. But that's what I said yesterday. If I saw 12 people say that, yes, do the combine, Brian, I was going to go and pull the trigger. But this would basically be the setup that I would trade at Top Step is I would just simply hunt for these 4-hour levels. I think we're coming into a 4-hour level now, especially this ATR script. So great. And then at that point, you drill down to the lower time frame chart. I love trading off 3-minute. Want to see a bunch of confirmed bearish divs. Yeah, you can see the divs in MACD. You can see Willie Stupid. So really, the question now is, can I get an M that comes in up top here? I don't think it's going to happen today because we're running out of time on today's session. But can I get an M? And then I'd use the VWAP or even maybe the 200 SMA, same sort of idea. But basically, the VWAP should align with the POC as my profit objective, 3-to-1 risk reward, rinse and repeat. Just keep doing the same thing over and over and over. The issue here, though, is like I said, we're kind of running out of time in the session. If this had happened, like, say, 4 hours ago, I would be like laser beam focused. But because it is now, I doubt I'll probably take this trade today. And of course, like I said, it's Monday. Not a surprise to see that they've been running stops and just breaking a bunch of hearts that there were people who were trying to pick tops and look for a pivot here. On a Monday, that's usually asking for trouble. So haven't done anything here futures markets wise. I guess the only reason why I'm mentioning this, as long as this guy's pointing up here, tech, Bitcoin, that kind of stuff, it's going to have a bit of a slog. But once this thing is sort of done, and it actually is looking like it might roll back over, then actually I wouldn't be surprised to see that Bitcoin firms up a bit and maybe we start seeing it catch a bit of a bid. Having said that, tomorrow, of course, is going to be the first day of the 2-day FOMC meeting, so I doubt I'm going to be doing any futures trading tomorrow. And I'm 99% certain I won't be doing anything on the actual Fed day. And we'll be doing our color commentary through the Fed meeting on Wednesday. So if anything, if you've never seen that before, if you do have the ability to join us, those are fun sessions through the Fed session, the post meeting press conference. So maybe watch for that and notices about that on Wednesday. All right. So Monday out of the gate, I'll let things breathe a little bit, let them fill themselves out. I do like the idea of hunting for some sort of top up here in crude now. You can see that was a V bottom. No top has come in here yet, so there's really no reason for me to do anything. As we had said, Japan basically catching a bit of a bid in Asia overnight. So on balance, not a big surprise to see markets moving higher here. Although you can see a whole bunch of divs and stuff are already starting to form up here. So there's no way in hell I could be a buyer up top here. And if anything, poor old Bitcoin. I was actually looking last night, maybe from the futures perspective, that we might see some sort of pivot through these previous lows, but of course they blew right through them. If anything, this is a good example. Maybe I'll save this conversation for tomorrow. How you sort of listen to the market as we come into levels. Clearly, there's no bottom there, no 3-minute bull divs, no W's. The market just blew right through that level. So clearly, the market is not impressed and getting ready to pivot off that level. So anyway, okay, let's head on over to the after party. I know we have a few daily brief requests. We'll circle around, maybe take a good look at some more of the site signals. Like I said, a bunch of really cool key reversal signals, and a few of them that are actually working quite well right now. Maybe we'll review what some of the signals produced recently and how they've gone. We'll also maybe take a look at breadth and what we'll do there. And of course, if anybody has any questions, we can always answer those questions as well. All right. Hope you got a bit of a clear view of what the hell Brian's thinking here. But keep in mind, it is Monday. And half of my job on Mondays is just keep myself out of trouble and just make sure I don't, go and break my trading plan by not following clean vetted setups. So. All right. Have the great rest of your day. PMA for the win. We'll see you all again tomorrow. And of course, tomorrow, Tuesdays, I would love to get a reading from Sjord and how the site build out is going and what he happens to see going on in Europe. So if you're interested in that conversation, be sure to stay tuned. All right. Have yourselves a great day. PMA for the win. All the best and bye for now.